Hey, it's Ira Wiley. According to a recent survey, 72% of homebuyers in the last year regret their purchase. I'm one of them. In March, I got caught up in the FOMO and caught up in the buying craze, and I purchased a presale condo here in Victoria that is 2 years away from completion. And as soon as that first interest rate hike hit in April, I was immediately hit with a wave of regret and a sense of dread every time I even thought about it. I've been hoping there's construction delays and it takes longer to build so I don't have to deal with it as soon. In this video, I'll break down what the most common home buying regrets are, how you can avoid them if you are buying a home, and maybe how you can reframe your buyer's remorse a bit and feel better if you already did buy a home. Did I make a bad investment? At the end of the video, I'll share the numbers on my pre-sale investment and my plan on what to do about it. As always, please remember to give me a like and hit that subscribe button. If you're also feeling a real estate hangover like me, leave a comment below and let me know what your experiences have been and how you're coping with it. So the number one regret on this survey was simply paying too much. A third of home buyers paid over asking for their home in the last year. In a market with multiple offers and unconditional bids, it was very easy to get caught up in the FOMO and pay 5, 10, or even 20% above asking price. Once the party ended and interest rates went up, home buyers with variable mortgages found themselves paying a bigger monthly payment or paying less on their principal amount on top of paying that big initial sticker price already. It's a double hit these days with the costs of everything rising at the same time, including home maintenance costs, strata fees, insurance, and just about everything else. Ultimately, the most important thing is to look at the long term. Historically, real estate prices will go back up. If you're trying to flip a home in 1 or 2 years' time, that's where you could run into trouble. Holding out for at least 5 years mitigates this risk. If you buy a home based on fundamental investment principles, such as buying in a good location, buying within your means, then it's a matter of waiting for the market to recover. Also, think about the alternative, which is paying rent, not having a stable home, and not building any equity. The second most common regret was feeling rushed and buying too quickly. This resulted in people buying homes in the wrong location, the wrong size home, or compromising on a long commute. Almost every buyer compromises on something. Make a list of the things you can't compromise on, and these should be related to the resale value. You can't change location, lot size, or the layout of a home without a major reno. For a condo building, remember you're investing in the entire building, not the individual unit. So make sure that the fundamentals of that strata are sound, and then you can always have confidence your home will sell in the future as long as you can ride out the fluctuations in the market. And finally, the third and fourth regrets were buying a home that required too much maintenance or a fixer-upper. Always get a home inspection. It was common to waive inspections, but foregoing the few $100s it costs is not a good idea in any market. A home inspection is worth every penny. People buying a home that needed renovations have regrets now with the shortage of trades and the high costs of renovations. Plan your renovations carefully. Ask what's really important to do today, and if you can live without it, wait until prices and the trades come back. Maybe do a simple reno like painting or new floors to scratch that reno itch, and leave the big stuff like the bathroom and the kitchen alone for now. I think the most important thing to remember is to think long term, zoom out. Prices will come back. Most people in the world don't own a home. It's a privilege and it affords stability not having to worry if the home you're renting will be sold or the landlords will move back in. Buyer's remorse is normal. Even after making a great investment in an upward market, it's still a huge purchase. It's a huge life change, and it will be met with sleepless nights and anxiety, and I think that's normal. Back to my investment. The pre-sale I bought in Victoria was $520,000 plus GST for a one-bedroom condo. After property transfer tax, GST, all the closing costs, my all-in price is about $554,000. I bought this as an investment. My plan was either to assign it before completion or to rent it out after and then sell it. Back in March, you could get a variable mortgage rate for 1.5%, which was a monthly payment of about $1,722. After strata fees, property taxes, and insurance, I would probably be paying about $2,300 a month to hold this property. I estimated the rent for a one-bedroom would be about $2,200 in 2 years' time, so I was pretty close to breaking even. I'd have to put in $100 or $200 a month to keep this investment, and I was prepared to do this for as long as possible, perhaps even up to 5 years, because I know I'll build equity and one day be able to sell it for more than I paid. Here's the bad news. Fast forward today, and now interest rates are about 5.25%. My mortgage payment will be $2,641 a month. I'll be losing $500 a month now. If interest rates go up to 8% in 2024, when this is complete, I could be losing $1,000 a month. Scary numbers to think about, and I know I'm not alone in feeling this way. However, although interest rates have gone up, rentals have as well. In fact, I probably already underestimated the rental rate. A one bedroom is now about $2,100 a month, so this could easily be $2,400, $2,500 a month by the time it is complete. We also just don't know what the interest rates will be in 2 years' time. Will they be 8%, stay around 5%, or back down to about 2%? I'm prepared to ride it out because I'm bullish in Victoria long term. We've got the best climate, best city, a great economy, and I know the market will recover. It's just a matter of time. I'm confident in the location I bought, and there are some unique things about my condo, such as its top floor has views, amenities in this building that the competition or other buildings won't have. If interest rates go to 8% and property values plummet, that also means that new development will slow to a halt and other condos like this won't be built for a long time. So I'm hedging my bet a bit there, and that should keep my investment propped up. $1,000 a month for 5 years is $60,000. That's a lot of money to lose, but this condo only has to appreciate 10% over the entire course of that 5 years to break even. Again, looking at the historical graphs, there are periods that flatline, but it always recovers eventually. Thank you for watching. Remember, we can't control the market, but we can control our reactions to it. Did I make a bad investment? Maybe. Time will tell. We'll have to see. Either way, I'm going to be positive about it. I'm going to be grateful for the opportunity that I had the ability to make any investment at all. And I want to hear your thoughts, experiences in the comments below. So please let me know, and remember to subscribe so I can keep making more videos like this in the future. Thank you for watching.